And today we're talking about something that you have probably seen if you've looked at stocks or you've passed by the news, where you see all these headlines that say, hey, the S&P index or the Nasdaq. Oh, you know what? You might think, what does that actually mean? Like, what exactly is an index? Now this is the place where business makes sense, where we take complicated topics and, you know what, we just keep them simple. Index is simply a group of stocks or a group of types of investments that people put together to help them understand, hey, what's the trend in the overall market? Because if you think about it, there are thousands and thousands of stocks in the market. So indexes are created as small groups that represent, I guess, the whole population. So people can say, hey, the economy's doing good, or hey, the stock market's doing good, or it's doing bad by watching these few. Now, the tricky part is which stocks actually become part of the index. Now, that's where you get into the major three. You have the Standard & Poor's or the S&P 500. Now, the S&P 500 is a collection of about 500 of the largest companies in America, and it looks at all of those stocks because the logic is, if you can understand what's going on with these 500, the rest of the market you can probably understand as well. Now, the next major index is the Dow Jones. Now, sometimes you'll see this as the DJ, or you'll see it now called the Dow, but the Dow Jones index is simply 30 industrial companies. Now, when you say industrial, what that pretty much means are companies that really impact every aspect of our life, whether that is healthcare or whether that's a major manufacturing or whether that's consumer goods. They pick 30 very large companies that pretty much impact every area of our everyday lives, and they monitor, hey, what's going on with these 30 companies? Because the logic is, if we can understand what's going on with these 30 companies, we kind of have an idea of what's going on with the economy as a whole. Now, the third major index is the Nasdaq. Now, this one gets a little tricky and a little fancy. Now, the reason why I say tricky is because the Nasdaq is the name of the index, and it is also the name of a stock exchange. And simply, a stock exchange is where you actually go to buy the stocks and trade the stocks. But an index is something completely different. The index is just a collection of stocks that they use to monitor and allow them to understand, hey, what's going on? What are the trends? Now, with the Nasdaq, the reason why I say it's a little fancy is because the Nasdaq has about 3,300 stocks that are in this index. Now, this is much bigger than all the others. And part of it is because the Nasdaq was the very first exchange that allowed computerized trading. And because they've allowed computerized trading, they are able to do calculations and computations at a faster rate. Now, all the other indexes, they use computers now as well. But the Nasdaq was the first to do it, which is why they actually have more stocks within their index. And again, the logic is, if you can understand what's going on with these 3,300 stocks, you will have a good idea of what the entire stock market for the America is doing. Now, you may be wondering, okay, if all of them are designed to give you an idea of where the market's going, why do you need three? Now, to make it even a little bit more complicated, there are a lot more indexes than just these three. These are just the three main ones. And part of the reason is because, stocks are not an exact science. I mean, different people have different opinions. So you have different indexes that will give you a different perspective on the market. Now, one of the things that you will notice is that if all three of the major indexes are going in the same direction, that usually gives you an idea that, hey, the market's probably going in that same direction as well. But there are times where one of the three may be going up and the other two may be going down, or vice versa. And that is because each index gives you a perspective that the other one may not. Again, the S&P 500 largest companies, The Dow Jones are 30 of your largest industrial companies, and Nasdaq is 3,300 of a wide range. So when you understand what someone says, hey, the S&P is up, what that simply means is the group of companies that fall into the S&P as a whole or as a collective, hey, they're going up or they're trending upward. Now, that doesn't mean that every stock that's traded or every stock that's included in the S&P is going up. It just means as a whole, the collective direction is going up. And that gives you an idea or gives some people some comfort to say, hey, that's a sign that the market is doing well. And then if they're going down, hey, that's a sign that the market may not be doing so well when it comes to stock prices.